A warm welcome to everyone to the first in our series of webinars. Our speaker for today is Gaurav Lohia, Head of the Investment Advisory Group of HDFC Bank. Gaurav will be speaking about demonetization and the way forward.
Okay, so demonetization, I think a lot has been spoken about demonetization since the last many weeks and possibly last 2 or 3 months. A lot of negatives have come out for the short term, and there has been a lot of pessimism around the process of demonetization. But we would want to look beyond the clouds that are there at this point in time, cut through them, and start looking at the way ahead post demonetization, the benefits that demonetization will bring to India as a country and the economy in particular. Demonetization in our अभी तो बटन दबा एक साथ पूरा.
Okay. This will not get delivered. Bhavik will do that.
No, understand.
ये उनके रेफरेंस के लिए और वो अलग नहीं पी
Okay, then No, he will do the changes that he's making. That will be seen by the viewers.
पूरा एक साथ आ जाएगा.
नहीं वो आ जाएगा एक साथ वो दो बार दबा देगा. हाँ दो बार थोड़ा भी.
Yeah, there'll be a little bit of lag,
That is
but
fine.
it's nothing, it's just natural. Yeah.
Because finally when he's going to talk, this slide is going to be there for a minute or so people are going to read this.
People are not really.
They are not going to read. All
They're not going to read. They're just going
They want to hear what he has to say.
to. So they're not going to see.
They will see the webinar.
Okay, they'll see me and the webinar.
PPT
PPT and me.
Yeah.
Okay. ठीक है अभी बोलूँ. Okay. So demonetization, in our opinion, has brought about a sudden but seemingly long-lasting behavioral change amongst people. That has changed their mindset towards electronic payment, and I think the adoption rate has gone up substantially. We think what इसको ऐसे मत घुमा अभी. Adoption rate has gone up substantially. जब तक leapfrogging जब तक नहीं बोले तब तक change मत करना, क्योंकि वो लास्ट वाला जो रॉकेट है वो leapfrogging है. पीछे जा, पीछे वो देख लास्ट वाला जो रॉकेट है ना, बैंकिंग डिजिटली लीपफ्रॉग फ्रॉम बीइंग अनबैंक्ड एंड अंडरबैंक्ड, वो है लास्ट. तो जब तक वहाँ पर नहीं आऊँ तब तक मत घुमाना इसको. हाँ, या मैं तेरे को ऐसे कर दूंगा, इशारा कर दूंगा.
क्योंकि इस टाइम पे आपका हाथ ऐसा हुआ ना, तो इसके पहले आपने बोला था ना हाथ ऐसा रहेगा तो वो चेंज करता.
अच्छा.
तो मैं वो आपके हाथ के हिसाब से.
His attention will be on your hand.
अच्छा.
His attention will be over there.
ओके.
तो आपका हाथ.
मेरा हाथ तो तू जानता है ऐसे हिलते
1
रहते हैं.
minute.
तो
We have 1 minute.
Yeah.
And you can be a bit loud. Being loud is fine.
या
कोई इशू नहीं है.
लास्ट
हाँ.
आपके हाथ के हिसाब से जाओ या स्टेटमेंट के हिसाब से.
तू मेरे स्टेटमेंट को पकड़. अगर स्टेटमेंट और हाथ तू मेरी तरफ देखता रहा कर, बस मैं अगर तेरी तरफ देखूँ ना तो घुमा देना.
थोड़ा सिंक करना पड़ेगा.
Why don't we do this and then we do?
This is I think best thing to do.
Yeah.
ठीक, वैसे भी कर सकते हैं. वैसे भी बट तू मेरे को देखता रहना, तू समझ जाएगा. तेरा सिंक है वैसा. ठीक है.
No, but I think that's right. Eye contact with him is not the point. You need to look at that camera. So
I'll be looking at he'll be looking at me. Okay.
Are you listening?
No, I'm outside.
Okay. And I think it's going to bring about increasing tax compliance. New initiatives like Bheem app, UPI, Aadhaar-based money transfer, USSDs, increased proliferation of debit card and credit cards is likely to ensure that a lot of people who are either too आवाज ठीक है एकदम?
ये ठीक है. It's 4 o'clock. So you
Yeah.
want to go
We
live?
need to go down.
Yeah. Okay.
Just a second. You tell him so you go live.
Yeah. Everyone phone silent, vibrate.
Phone silent.
Vibrate also.
वो IT का आदमी कहाँ गया?
I think we'll
Yeah.
start.
Okay, fine.
Best of luck, guys.
मैं इंडिकेट करता हूँ
And so 1 hour. 45 minutes.
30 to 45 minutes.
Can I start?
Can you see
Yeah.
the thing?
Yeah, I can see it.
Okay.
A warm welcome to everyone to the first in our series of webinars. Our speaker for today is Gaurav Lohia, Head of the Investment Advisory Group of HDFC Bank. Gaurav will be speaking about demonetization and the way forward.
Right. Thank you, Crystal. Demonetization. I think this theme has now been spoken a lot about. Over the last many weeks, we, all of us have endured a lot of positivities and negativities around demonetization. Uh, I think after a long, after a lot of time has passed, post demonetization has come, it's time to actually start to cut through the clouds and start looking at the way forward. What is the tangible benefits that this process of demonetization is likely to bring to India? What is the benefits that it is likely to bring to the economy per se? In our opinion, demonetization has brought about a sudden but long lasting change. It's a behavioral change. In terms of adoption of electronic and digital payment mechanism and usage of such channels uh, into the current system, we believe that this going forward will lead to more formalization of transaction in the economy, leading to better tax compliance. Also, with the kind of new age applications that have come in, like UPI, the BHIM app, Aadhaar based money transfers, the USSDs, and the traditional electronic ways of transaction like credit cards and debit cards, a lot of the country today has moved from being unbanked or underbanked to transacting digitally. you know when I say this, what I mean is that there have been many people in the country who did not even know about banking, right? And they have started to use a lot of digital payment channels like wallets. Some of them have also started to use debit cards. What this has done is that it has moved them straight from being unbanked or underbanked into the next level of banking, bypassing the traditional banking channels towards the digital banking or the electronic banking system. I think that's a big move from our perspective, from the country's perspective. As per estimates, about 11% of transactions in the country are today in electronic or digital format. Uh, but that is prior to demonetization. Demonetization and subsequent cash crunch and the caps on withdrawals have led to significant rise in digital payments. So we've seen payment channels like mobile wallets, USSDs, debit cards, credit cards. The adoption rate has increased substantially. The transaction has gone through the roof. As per estimates, between 8th November and 25th of December, there has been a 400 to 1000% surge in terms of digital transactions. For instance, if you look at UPI transaction, as of 8th November, the transaction was about 19 million per day. Has moved up to about 140 millions per day when we looked at 25th of December. Uh, Channels like digital wallets have grown by 2 to 300%. We've seen strong growth in debit card and credit card transactions. So we believe that this is a revolutionary phase in the Indian economy. And why do we say so? So, a lot of you would argue that, cash crunch and therefore, uh, the cap on withdrawals in the banking system has led to a massive proliferation of digital digital payment mechanism. But we believe that A, due to improved adoption rate, B, due to ease of transacting, even if 10 to 12%, incrementally 10 to 12% of the transactions happen in digital and electronic mode, and I'm talking about a period where cash normalcy begins, which means broadly caps are off and people and cash goes back into the economy, and the people continue to do transactions normally. Even after that, because a lot of people have experienced the benefits of transacting digitally, transacting electronically, incrementally 10 to 12% of people can go ahead and move permanently to digital channels. I think that can lead to possible doubling of the digital or electronic transaction rate. This, therefore, we believe is the beginning of the revolutionary phase, or we are at the cusp of a revolution, so to say, as far as the digital transaction or digital payment system in the country is concerned. The benefits of this would accrue in terms of reduction in shadow economy and more formalization of economy. We will talk about this in the ensuing slides. Now, when we talk about tax compliance in the country, about 3% of the country's total population today pays direct taxes. Now, think about it, from about 1.2 billion people, only approximately 3% pays direct taxes. The total tax to GDP in India, from including center and state, direct and indirect tax, stands at about 16.6%. The number is at 21% for emerging markets and about 34% for developed markets. One of the big reasons why we have such low tax to GDP ratio is that India has a very thriving has been having a very thriving shadow economy. And this shadow economy ensures that there are high level of tax avoidance, and tax payment is something which a lot of people non-payment of taxation is something a lot of people thrive on. There are a lot of business models that are developed on tax arbitrage models, and I think that is one of the reasons why India's tax to GDP ratio has been very low. In the process of demonetization has effectively brought about 86% of cash back into the system in terms of the SB 500 and 1000 rupee notes. Now, when they've come into the banking system, they are likely to be tracked. Even when they move out, they will start leaving their footprints, and they will start leaving trails. I think that can lead to increased tax compliance and sharp reduction in shadow economy. The government also is doing its bit in terms of incentivizing or giving tax benefits for digital payments. Recently, we saw the finance minister came out and suggested that for businesses who have turnovers less than 2 crores, the earlier deemed profit for purpose of tax calculation was at 8%. And if those businesses do their transactions through digital mechanism or digital channels or electronic channels, the deemed profit would be calculated at 6%. So for the amount for which digital transactions have happened, which effectively means that 2% incentive was given in terms of direct tax straight away to small businesses. There have been incentives provided for insurance, travel, fuel. So net, what we are saying is that as more and more people come into the digital and electronic payment channels, or become and make these more formalized, we believe that the tax revenues will start going up for the government. And why do we say so? Because as more and more people come into the formal channel of transaction, these channels will start leaving trails behind, and it will be very difficult for a lot of people who earlier avoided taxes to avoid them going forward, and therefore they will have to start paying taxes, which will increase the tax net and lead to more revenues for the government. Of course, when this happens, the government will have a high fiscal headroom, and that can lead to either cuts in tax rates, or it could lead to higher productive spending in budgets. Now, when we look at the positive rub-off of demonetization on banks and corporates, there are few things that come to our mind straight away. We've we've spoken about how gradually we would see increasing digital transaction or rate rising, which will ensure that the liquidity in the banking system continues to remain very strong. And what we've seen recently is that because of a massive inflow of liquidity into the banking system due to demonetization, interest rates have gone down substantially, and right now are at about 7-year lows. Couple with that with a steady inflation rate, which is not expected to rise substantially in the near future, we are looking at a scenario where interest rates in the country can continue to remain low for an extended period of time, if not go lower. Now, what it will do is, it'll have dual benefits. A, it'll revive, credit growth. Lower interest rates would incentivize people to either borrow for consumption purposes and drive demand, or borrow for investment purposes and create job opportunities. And I think both of them combined together would lead to push in growth momentum. A lot of questions have come to us prior to this webinar on the impact on equity markets. And I think the impact on equity markets can be profound over a long term. And it is something that we are all starting to witness gradually as we move ahead, and a trend will develop. And I'll tell you what is that trend. So when we look at the process of demonetization, what has demonetization effectively hit? It has hit cash, which is the oil which moves the wheel for a large part of unorganized sector which thrived on tax arbitrage, sector which could sell their products lower and cheaper than the formal sector because they did not pay tax, they avoided taxes, and that lower tax that they paid or no tax that they paid effectively acted as their profit margin. So what it will effectively do is that it will raise the playing field for these people higher, because they will have to be then compliant with taxes. And with GST coming in, it will be all the more difficult to evade taxes, especially when you are moving in a digital world and digital transaction world, where even one payment in that whole chain can ensure that tax compliance happens across the chain. So what it will do is it will start to push people in the unorganized sector who've been using tax arbitrage as their advantage point to either move towards formal channels and pay taxes, pay the normal wage rate and compete with the already established players, or they would be forced to move out. What it does for the current set of companies which are well established, companies who are in the listed space, companies who have strong balance sheet, very strong distribution network and are tax compliant, these companies will incrementally start to gain big market share. And as they start to gain market share from the unorganized sector, what we will see is that their revenues will start to grow substantially. Their profit margins will improve because their cost structures will remain static, and their profitability will grow many folds. This will obviously not happen immediately, but this is a process that has started, and I think as we go along next 5 years and 10 years, this is something that we are going to see incrementally. So the theme of unorganized moving towards organized, especially where tax arbitrage was the key to people's to unorganized sector's profit, I think is a theme that is structural in nature, and it will play out over the next 5 to 10 years. So I think this is a big theme that can be played out from an equity market perspective, and therefore we can see a lot of companies who are in the listed space continue to deliver very strong profits and earnings growth, and therefore the stock prices can continue to do very well over a period of time. There is also another technical factor that we wanted to bring to your notice. Today, if I'm an investor and I want to generate say about 9 to 10% kind of return, where do I look at? Gold, we don't think gold will deliver more than inflation over a period of time. It's a good inflation hedge to a large extent. With cash getting impacted, real estate is expected to see correction. Uh, Interest rates are probably at 7-year lows, as we discussed earlier. Now, what happens after this is that an investor will have to look at probably in allocating higher or having higher exposure towards equity as an asset class, even to generate 9 to 10% returns. So, therefore, investment into equity market will essentially start to grow incrementally also. Today, if you look at about 1% of the total household savings are invested into equity on an annual basis. This number is about 21,000 odd crores. Let's assume that this 1% moves to 2%, which is not very hard to fathom given the paucity of return in other investment channels. We are talking about an incremental 21,000 crores or 210 billion rupees coming into equity markets simply from household savings. This is over and above the money that comes in from FIIs, that comes in from the other channels like insurance companies, etc. So we believe that going forward, the case of investments into equity markets have only improved post demonetization. So that was the whole idea that we wanted to convey with this presentation. So thanks a lot for attending this presentation. There have been few questions that have come to us prior to this presentation, and we thought that we would try to answer few of them. So there is a question where someone asks that there are the traditional investment instruments in India going to lose their glitter in the next 5 years, and if yes, which are good for investing in high returns? So I think in the last slide we mentioned that at least from a near to medium term perspective, equities as an asset class looks primed for better returns vis-a-vis other asset classes in India at this point in time, and therefore from an asset allocation perspective, an investor should look at having slightly higher exposure to equities, of course considering his own risk profile and his personal circumstances, to generate returns which can be more than inflation rate or FD rates. While we are at it, there have been some requests in terms of naming few funds that investors can look at so far as investing in mutual funds is concerned. So I mean, please do not consider this as an advice from us. This is a part of our whitelist which gets published anyways and is sent to all our customers, and everyone should be talking to their personal investment advisors before taking any decisions on this. But we like for aggressive to moderate customers, one can look at funds like DSP BlackRock Opportunities Fund, Birla Sun Life Advantage Fund, Kotak Emerging Equity Scheme, and Franklin India Prima Fund. For a conservative to moderate customer or client, one can look at Kotak Select Focus, SBI Magnum Multi-Cap Fund, and HDFC Capital Builder Fund. So broadly, most of the questions were around these elements that we've spoken about. So So therefore, I think we will conclude this webinar at this point in time. We again thank you all for attending this webinar, and I'll hand it over to Crystal for her final comments.
That was very interesting, Gaurav. Thank you very much. Please spare a few minutes to share your feedback on the webinar. Thank you.